The crypto market has been subjected to a few spins, and has suffered something as brutal as a winter. It was not only the collapse of prices that hurt, but it was also the implosion of key components of market infrastructure, starting with the Terra ecosystem. Regardless of the threads of doom, the king of cryptocurrency seems to be gaining strength, and we need to know where its support is coming from. In early November, as the shock of the FTX saga tore through the fabric of the crypto ecosystem, Bitcoin suffered what would seem to be its last leg down, dropping to around $16,000 in value. The bad news didn't stop coming as the internet and crypto updates were clouded with news of bankruptcy, fraud, the spread of the damage, and the suspension of withdrawals. The hits kept coming, with Bitcoin being the main target. With Bitcoin's bruised ego, it did not fall further, and this was what we ought to focus on. One of Bitcoin's sources of strength has to do with its multiple use cases. Many insist that the asset is only about speculation and there is no fundamental value. This assumption even tends to come from experienced market observers, which is quite shocking. Bitcoin is not just for speculation, even though it is a speculative asset. Trading volumes picked up from the local lows at the beginning of the previous year. While no one knows who is behind these trades, on-chain data proves that the vast majority of Bitcoin moved. The address owners are not purely speculators either. For them, Bitcoin is a long-term investment, a store of value, an inflation hedge, and whatever name is given to it. Bitcoin does have utility just beyond short-term speculation. Recently, leading analytics firm Sentiment stated that Ethereum stakers have little to cheer about as values drop and crypto interest swivels to Bitcoin. From Sentiment's updates, the outlook is soaring for Ethereum stakers as recent gains have retreated and long-term stakers are down now more than an average of 30%. Ethereum 2.0 stakers have seen realized values completely taper off over the past 10 weeks. Additionally, long-term stakers are now down an average of 31%, quoted from Sentiment. Sentiment further explained that based on its social dominance indicator, interest in Bitcoin is at its highest since September, as the altcoins gains in 2023 have largely retraced. The top crypto asset is now outperforming many altcoins. Bitcoin's price is minus 6% in March, but still performing better relative to most altcoins. With crypto giving up much of its January and February gains, attention has returned to Bitcoin. Higher Bitcoin's social dominance historically has initiated market rebounding, Sentiment said. In addition, the analytics firm claimed that investors are now showing skepticism about the outlook of top crypto assets. However, Sentiment added that during its periods of fear, uncertainty, and doubt, or FUD for short, price rebounds are expected. According to the post, traders and hodlers of top cap assets are showing skepticism after markets have failed to rally following the February 21st peak. As FUD settles in, according to our metrics, probabilities of price bounces increase during this period of disbelief. So, what an incredible display of strength on Bitcoin's part. And I guess something that we can ask is there a secret to this source? One can argue that Bitcoin's value is similar to that of precious metals, even though both are limited in quantity and have selected use cases. Precious metals like gold are used in industrial applications, while Bitcoin's underlying technology, the blockchain, has some applications across the financial service industries. Every time Bitcoin tumbled in the past, critics have predicted its demise, but they have been proven wrong on several occasions, given that the token always recovers. While it's taking it a while for Bitcoin to fully recover from the severe damages impacted on it by the FTX collapse, its efforts are greatly acknowledged. Plus, there seems to be a delay this time due to concerns about intensified crypto regulation and the legitimacy issue. Negative pressures have littered the crypto market, yet Bitcoin's resilience is a wonder in of itself. One might think that the Fed is closer to the end than the beginning of its hiking cycle. However, that unfortunately isn't the case. So let's consider whether Bitcoin is capable of competing with government bonds like large cap stocks do. This might change someday, but currently 401k plans and other large scale investment funds are mainly stocks and bonds. Bonds don't compete with Bitcoin for allocation space in these funds. If anything gets temporarily displaced in the mix when bonds yields surge, it will probably be stocks. Meanwhile, Bitcoin devout are famous for holding on to their tokens through the roses and thorns. To them, a Bitcoin versus bonds debate never arises. In a way, this offers strength and support for Bitcoin. And right now, Bitcoin NFTs, known as ordinals, continue to generate a tremendous amount of buzz, hype, and speculation. So is this potentially a source for the recent support? From one perspective, ordinals can be the key to unlocking new value on the Bitcoin blockchain. And from another, ordinals can be a significant distraction from the core purpose of Bitcoin, which is to become a new form of digital money. In a worst case scenario, ordinals might make Bitcoin less attractive to institutional investors and welcome unwelcome regulatory oversight. In the traditional sense, ordinals are not NFTs, and they enable creators to inscribe content directly into individual blocks of the Bitcoin blockchain. The maximum size of ordinals is just 4 megabytes, but that's still enough space to squeeze in a tiny game, photo, or image into a Bitcoin block. These Bitcoin blocks only held financial transaction data, but currently, some of them include ordinal data as well. More than 260,000 of these ordinals have been created, and they have morphed from an interesting conversation piece into a real phenomenon. A single ordinal recently sold for $214,000, and by comparison, that's more than the current price of a CryptoPunk NFT on the Ethereum blockchain. Simply put, there is potentially real money to be made here, and that's going to incentivize even more entrepreneurs and innovators to develop the market for Bitcoin NFTs. According to estimates, the total value of the NFT market is now close to $20 billion annually, with Ethereum dominating the lion's share of that metric. And even Bitcoin only gains a 10% market share of the general NFT market, it could get investors thrilled about future growth prospects of Bitcoin. Besides, according to some forecasts, the NFT market could explode in value to nearly $200 billion by 2030. However, the market for ordinals is becoming a bit too frothy and speculative just 2 months after it was created. For example, the creator of the Bored Ape Yacht Club and CryptoPunk's NFT collection is now going to issue a new 300-piece NFT collection for Bitcoin called 12-Fold. While the creator, Yuga Labs, said that there will be no added utility for these NFTs, it is almost assured that there will be heightened demand for these NFTs simply due to their novelty and the outstanding potential to flip them for huge profit. But if we were to take a look at this from a regulatory perspective, adding Bored Apes into the Bitcoin discussion twists matters a bit. Bitcoin has always been a target of scrutiny by regulators, who generally acknowledge that Bitcoin is the only crypto that should not be regulated as a security. Well, Bitcoin is a digital currency and that's it. If Bitcoin now offers NFTs, it will become hard to make that argument. Plus, there is already an SEC investigation into the Bored Ape Yacht Club NFT collection from Yuga Labs. According to the SEC, the Bored Apes might actually represent an unregistered securities offering, and it would be a shame if Yuga Labs somehow gets muddled up with regulators. Moreover, there is a real risk that adding NFTs to Bitcoin might dissuade risk-adverse institutional investors. How are large funds and endowments going to react if they find out that Bitcoin has become the bad guy? Well, when this happens, tiny photos or videos will potentially be inscribed into their Bitcoin holdings, and institutional investors won't have any of that. In comparison to other markets where Bitcoin is recording high prominence, the current size of the NFT market is a no-brainer. If we decide to be optimistic and use the NFT market worth $20 billion as fortitude, that's still 1/6 of the size of the global remittance market, where Bitcoin is playing an increasingly essential role. Simply put, NFTs probably won't move the needle when it comes to valuation. When there has been plenty of updates stating that Bitcoin NFTs could make Bitcoin even more valuable than it already is, the point is if you are buying Bitcoin because of the NFT buzz, then you're getting it all wrong. No doubt Bitcoin is a thrilling long-term buy, but not just because of the NFTs, but more so its role in the key financial markets, where it is becoming increasingly mainstream from a global standpoint. Nonetheless, it still stands that Bitcoin is not depending on one source for strength and support, and NFT's failures to move the needle does not mean that it won't contribute a bit to Bitcoin's success. This is not the first time Bitcoin is thriving in a disoriented crypto environment. Its source of strength, yet elusive, is not a mystery, as little things are also playing an effective role. Yeah, the little things matter, even for the king of cryptocurrencies. But that's going to do it for today's video. Make sure you hit the subscribe and notification buttons, and we'll see you in the next video.